Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically in the previous lecture, we had done with the other topics. Okay. So basically in this lecture, we are going to start with another important topic, which is the stock market indexes. Okay. Stock market indexes. Now I know that most of you will get confused that we had already covered the topic of Indian capital market, which we also known as Indian stock market, right? We all know that we had covered these type of topics, right? Got it? So why we are doing this topic again? That is a most common question which could arise in your mind. Okay. So here I would like to make sure that you understand we are not going to talk about the Indian capital market or the Indian stock market. Okay. We are not going to talk about them. What our focus is, if you just look at here it's written down stock market indexes. Okay. This is our topic for this series. Okay. Indexes. Okay. And these are the topics we have scheduled for discussion under this particular series. Like, we will start with the introduction part. Okay. Historical overview, detailed history, types of indexes, formation of indexes, weighting method, the conclusion. Alright. That is what we are going to cover. Okay. In this particular lecture, we are going to see that how the stock market formed, okay, thereafter evolution, thereafter indexes, and you can say wholly approach to the indexes. Okay, we are going to cover these things. All right. So I want you all to be attentive in this particular lecture, because in this lecture you are not going to only learn about the new things, but also the previous things which we had covered in the previous lecture will be in the way for this lecture also. Okay, like you could say that we are going to interconnect the things all together. All right. So let's start with introduction. A stock market index is a statistical tool to gauge fluctuations in the financial market. These indexes serve as performance indicators reflecting the performance of a specific market segment or the market overall. Like if we talk about the Bombay Stock Exchange. Okay. And then when we talk about the National Stock Exchange. So first, I would like to ask you the question like, what is the name of the index for this particular market segments? You have only 15 seconds to think and answer. Then I will give you the answer. Your time starts now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13th, 14th, 15th. The times is up. Okay. So basically, if we talk about the Bombay Stock Exchange, so what is the, you can say stock index for the Bombay Stock Exchange? It is known as the Sensex. All right. Sensex is the stock index for the BSE or the Bombay Stock Exchange. All right. Whereas when we talk about the National Stock Exchange, then Nifty 50 is the stock index for the National Stock Exchange. Okay. So that is a scenario we have created here. Bombay Stock Exchange and the National Stock Exchange. So if we talk about like how many companies are there, then we know In Bombay Stock Exchange, nearly about 5,000 companies have been registered. In the National Stock Exchange, about 2,200 something companies are listed. Okay. So the question is, like, how do we come to know that how these companies are performing? Okay, how these companies are performing. Suppose you are the investor. Okay, this is you, and you want to be the participation in the stock exchanges. So you have the two choices primarily. Either go with the Bombay Stock Exchange or the National Stock Exchange. All right. So how you will come to know about that which stock exchange is performing well and which is not. Okay. For this, what we will have to do, we will have to see the indexes. Okay. Like if the index is in plus or in the positive sign, it means that market is doing how? Market is doing well. All right. But if the Sensex, or you can say if the Nifty 50 is in the minus or in the negative, what is mean? That the market is going down. So on the basis of the positive and the minus things, the things could be decided, like how the indexes function. Okay. So that is what we have seen, that it is the statistical tool. Statistical tools means because it's basically works in the numbers. Okay, or in the signs, like numbers, positive numbers. Okay, suppose positive 2.002222 this and that. This kind of picture, if you see, it means that market is performing well, right? But on the other place, if this is like this, all right, it means that market is going down. All right. So that's why it is known as the statistical tools, because the numbers which are used here are the indicators which shows you the correct picture. All right. These indexes serves as a performance indicators reflecting the performance of a specific market segment or the market overall. Right. To construct a stock market index, equities are selected from companies that are similar or meet specific criteria. Okay, so please remember this word, like it is the most, you can say first and the very, very specific way. Like similar or meet specific criteria. All right. These selected stocks are already listed on the exchange and actively traded. All right. Say share indexes can be created using various factors such as industry, sector, or the market capitalization. All right. So basically, if we look at this in the clear form, the first thing we have seen is that similar or meet specific criteria. That is what we have found. Share market indexes can be created using factors like similarity in the industry point of view, in the sector point of view, in the form of market capitalization. Okay, on the basis of these three factors, basically what's happened, the things could be done. Industry, sector, and the market capitalization. All right. So here we have seen the word market capitalization. What do we mean by this? Like what is the meaning of the market capitalization? Okay. And you can say like what is the meaning of industry overall? Okay. So basically, and sector also. So basically we talk about the concept of industry and firm. Already I had told you about this in the previous lectures, but I think that these lectures have been completed after before the long time, okay, or you can say long time ago. So that's why it's a fresh revision for you. Okay, so basically if we talk about the firm, then it is an individual unit or manufacturer plant. Okay, whereas when we talk about the industry, then it is a group of firms engage in similar type of works or under one management. All right. So just this is the basic definition. Like suppose if there is a company called the XYZ. This is involved in the you can say leather manufacturing, for example. So what is the company? The company is the firm. Why? Because it is a single entity. But suppose if there are XYZ, PQR, ABC, DEF, all of these are involving in the leather manufacturing. So what does it form? It forms that these all are the leather industries. Got it? That is a thing. So that is the definition of industry by the similarity. If we talk about the under one management, suppose all of these companies owned by one single entity, for example, Z. Okay. So this will be known as the Z industries. Okay. Because all these firms are under the single or the one management. So this is the definition of industry or the firm. Now what is the definition of sector? Third definition is stands for the sector. Like what do we understand by the term sector? It reflects the segment of market belong to one type of manufacturing or service provider. Okay. Sector reflects a segment of market belong to one type of manufacturing or the service provider. For example, suppose if there is a you can say manufacturing of vehicles. All right. So this vehicle will be the sector. Of which sector? Automobile sector. All right. Why? Because all of these are involved in one type, which means vehicle type. All right. If this is a, you can say the financial and the credit facilities, then it will be a financial sector. All right. So remember, however, the industries could be different, but sector could be different. Okay. That is a little bit confusing. Let me make it clear. Suppose if we talk about the industries. All right. So industries means a specific type. All right. A specific type or in the similarity. So suppose if we take an example of the automobiles, for example, automobile sector. Okay. So automobile sector is comprising all the units which are making the vehicles. All right. But if we go with the industry, then it will be a two-wheeler industry. All right. Four-wheeler industry, and thereafter suppose electrical industry or electric vehicle industry. All right. This is the thing. Got it? Industry, firm, and the sector. Okay. Third is the market capital. Fourth is the market capitalization. Market capitalization. So what do we understand by the market capitalization? What is the meaning of it? Let's understand. It stands for total market value of an organization listed in the stock exchange. Okay, and it is calculated on the basis of multiplying total number of shares with total outstanding shares. Okay, this is the formal definition of the market capitalization. It stands for total market value of organization listed in the stock exchange, and it is calculated on the basis of multiplying total number of shares with the total outstanding shares. All right, so let's try to break it down. Suppose if this is a organization XYZ. Okay, so always remember, whatever the company is, or you can say whose market capitalization we are going to calculate, it must be registered in the stock market. It means that if the company is private limited, okay, then through this method we could not eligible to calculate the market value. What is the reason for that? Why? Because we know that here is the total number of shares. It means that the company had launched its shares. Okay, and only those companies are permissible to launch the shares, or you can say only those organizations are permissible to launch the shares who have been registered themselves on the stock market, right? It means that the tag of private limited will be removed and the company should be XYZ Limited. Okay, so if this is the organization XYZ Limited, it means that its shares we could calculate. Okay, so this is the first condition which is satisfied, that the company must be listed into stock exchange, then only it could issue the shares. All right, so second is calculation. So calculation is on the basis of multiplying total number of shares with the outstanding shares. Okay, for this, suppose if this is an organization XYZ. Okay, so XYZ has launched 70 shares. Okay, this is the total shares. Okay, and thereafter what is price of each share? The price is rupees 400. All right, so what should be the total market capitalization? Total market capitalization will be 400 into 70 equal to this one, right? 28,000. Okay, for example, this is just make it. All right, no issue, just for example, no? All right. Okay, so this is the calculation, means that this 28,000 will be the market capitalization. Okay, that's what we had seen. But remember that this is what? This is totally wrong calculation. Why? Why I'm saying this is totally wrong calculation, but the formula is the same which we had used. So why it is saying as a totally wrong calculation? Now just remind yourself, like what definition you had read out, that multiplying total number of shares with the total outstanding shares, not total shares. Outstanding. Outstanding means that the shares which have been purchased by the general public or market investors. Okay, so only those shares which have been purchased by the general public or the market investors will be the part of outstanding shares, right? So suppose, for example, if the 70 shares, if total number of shares were 70 shares, right? Thereafter, price of each share is rupees 400. So the total value will be rupees 28,000. But suppose if the outstanding shares are only how much? Are only suppose 65. Okay, it means that the shares which have been launched by the organization, only the 65 of the shares have been purchased. Okay, 5 shares have not been purchased. Okay, so we will only consider those shares in the calculation of the market capitalization which have been purchased through the outstanders, or you can say through the general public or the investors. So for this, only the 65 shares have been purchased. Okay, so now the calculation will be 65 into 400 is equal to 000. All right. Thereafter 2, not 2. 65 into 4, 20, and this and that 26. Okay. 260. That will be the calculation. Okay. So the market capitalization will be only 26,000. This will be the market capitalization. Okay, so how the market capitalization calculated, I have shown you. Okay, what is the formal definition? It stands for the total market value of an organization listed in the stock market. Remember, this is the necessary condition, and calculated on the basis of multiplying the total number of shares with the total outstanding shares. Okay, and remember, outstanding shares, not total number of shares. Okay, so this is the correct definition. Thereafter, we have seen the you can say difference between the sectors and the industry. Okay, and we have also seen the difference between the industry and the firm. Okay, so we have seen this. All right, now each stock market monitors the price movements and the performance of the stocks included in the index. This means that the success of a stock market is directly linked to how well the constituent stock perform. Put simply, if the prices of stocks is an index increase, the index value also increase. For example, suppose this is the stock index, and suppose it has registered 10 stocks. For example, okay, 100, 200, 400, 1000, 500, 600, 200, 300, 200, 100. Okay, just add them. 300, 304, 700, 700, 1700, 1705, 2200, 2006, 2800, 3000, 30,000, sorry, 3000, okay, 33,000, 3300, then 35 and 36. So total value will be 3,600. This will be the total value, okay, which will be calculated from here. All right. Now, suppose what is written down here? That it monitors the price movement and the performance of the stocks included in the index. This means that the success stock market index directly linked to the performance of the constant performance or stocks performance. Okay. So suppose this is the first condition. So total value is 3,600 basically. Thereafter, this is stock 1. Now stock 2. The same stock, but the condition is 2. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Alright. 100, 200, 600, 2000, okay, 600, 700, 200, 100, 300, 200. Now just calculate the value. 300, 900, 11. Okay, just calculate me. 6, 7, 7, 7, 2. So the calculated value nearly about, okay, 300, 900, 1100, 1700, 2400, 2600, 2700, 3 and this. Okay, so the nearly the value will be about 3,000 something. Okay, it's the estimated value. All right. So this is the condition. So what you are seeing here, like individually, some of the stocks value has been increased. Okay, if we just go by the word which is written down here, is that the stocks prices index, sorry, the prices of the stocks increases, the index value also increases. Okay, so we have seen that the value of some stocks have been increased, right? Like here you could see, all right, that the value of some indexes, or sorry, some stocks have been increased, but it's still the value from 3,600 has been declined to 3,000. What is the reason? Because some of the stocks value have also decreases. Okay, like in the previous it was 300, now only 100. This is the same, this is the same, this is same. Okay, this is same. So what is going on here? Like the overall performance is depend upon the performance of the constituent stocks. Okay, so that's how the system works. All right. So students, basically in this lecture we have done with the introduction part. Okay, we have seen the certain values. Okay, we have seen the new concept of the market capitalization. We have taken the example of the you can say stock index performance. Okay, in the next lecture we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture, and what do we say? We say thank you.